And one of the other themes that the customers keep talking through, Frank, just as it relates to some of the partnerships, whether it's with Tableau or Salesforce or ThoughtSpot, some of the other interfaces that's making your data more consumable by the mass market. And we've heard some incredible stories of customers moving, faster with you because of those partnerships. Can you just bring us up to speed on what you're hearing and seeing from customers, and what some of the deployments look like that you're hearing kind of common feedback on? Thanks.
Well, we have relationships literally with every single business intelligence BI vendor. Tableau is definitely the largest one. But we also we're going gangbusters with Power BI, which is the Microsoft product also, and we expect to see a lot of growth in that area as well. Those relationships are really, really solid. We have a product of our own called Snowflake, which is really not meant to be so much competitive, with the likes of Tableau and Power BI and many of the others. That's really, our homegrown, if you will, embedded product really for data analysts as opposed to, for end user distribution. But there's no doubt that Snowflake makes these products absolutely sing. It's just a sheer scale of execution, the performance, the provisioning. Without Snowflake, it's just very difficult, for these products to really have the snappy dynamic performance that users are looking for. So the combination of these technologies, Snowflake with the entire family of BI products out there, very, very important to deliver a good sort of end result to the customer.
Thanks, Frank.
Your next question comes from the line of Kash Rangan with Goldman Sachs. Your line is open.
Hey, guys. Thank you very much. Congratulations on a superb quarter. Two questions. Frank, one for you. As you talked about how the decisions are increasingly being made by the C-level, not just the CIO, but CEO level. Can you talk about how they are looking at Snowflake in relation to their digital transformation initiatives? We generally hear customer experience, employee experience is fairly digital. But help us connect the dots. What are your CEOs, customer CEOs, thinking in regards to Snowflake and how Snowflake specifically drives their digital transformation? Maybe I'll just stop at that. No, thank you.
Yeah. The angle they're taking is one of digital transformation. IT organizations are typically focused on what we call modernization. They're taking existing workloads. They want to move them from the on-premise environment to the cloud. But essentially, take advantage of the utility model and all of that. It's fundamentally, running the same workloads, on a platform like Snowflake. When you get to business people and CEOs, they're looking for new angles. They're looking for transformation, not just modernization. So it's often very easy to determine, in these conversations whether people are after doing things differently and looking for advantage. Digital transformation plays a big role. Well, what that means here is that they're looking to drive signals out of their data. They're trying to define data relationships, through data models that they then can take advantage of. Once I can describe a data relationship, I can predict it, and I can even make prescriptions out of it as well. And things are going to go end-to-end digital, lights out, light speed. So it's the digital transformation is a big thing. You can think of things like really improving the efficiency and yield on marketing and sales outreach, improving service experiences, and obviously very, very, very high scale and very, very high precision and very, very high economy on these type of processes compared to what they historically have done. The data cloud is central to these conversations. One of the things that we drive very hard is that in future, data operations are going to be very much dominated by data really moving in an orbit where, in other words, data is flowing between partners and all kinds of stakeholders, and people are able to, not just analyze data in silos, but very effortlessly address data really across a very broad orbit that includes their own data, but then, external data sources, data from partners, social media, IoT, structured, unstructured. That's really where people are looking for significant advantage from where they historically have been.
Got it, Frank. And also, your biggest customers, what are the problem areas that they're pushing you into that could open up new opportunities? And that's it for me. Thank you so much.
Our biggest customers, what are the opportunities they're pushing us into?
Well, the opportunities that are central to the conversations with our bigger customers are data cloud oriented. That means establishing data networking relationships, not just internally, but especially externally. I mean, we're well on our way in our journey. I mean, we disclosed some of the growth rates in our prepared remarks, but that conversation is front and center with every single customer. Everybody's trying to figure out. Historically, we have shared data through APIs and through file transfer processes, copying and replicating. It's been an enormous struggle. The opportunity with Snowflake is to make this zero latency, zero friction, completely seamless. So it is an enormous game changer to what people are used to and what the status quo has been. Yeah.
Super. Thank you. Your next question comes from the line of Brad Reback with Stifel. Your line is open.
Great. Thanks very much. Frank, early in the call, you talked about the limitlessness nature of the product set, and that it's only limited by the customer's imagination. How do you help those clients manage budgeting issues given the usage that they rack up on the system very quickly?
Yeah, it's a good question, and certainly a topic that we discuss often. The big change in paradigm is that historically, in on-premise data centers, people have to manage capacity. And now they don't manage capacity anymore, but they need to manage consumption. And that's a new thing, not for everybody, but for most. I mean, people that are in the public cloud have gotten used to the notion of consumption, obviously, because it applies equally to the infrastructure clouds. Now, we do a lot. We have full-blown chargeback capabilities so that the consumers of compute and of our service are really accountable for what they do and don't do. We have hard limits, we have soft limits, we have notifications, we have dashboards. So there's a lot of ways to do this. But at the same time, people are really so motivated and inspired by the capabilities that they have. Sometimes they get a little bit out of control in terms of the amount of processing that they were planning to do. It's a very, very buoyant situation. I mean, we've been bottled up literally for generations, and now there's a situation where there is no upper limit to how much you can do, and that's intoxicating, quite honestly. And we also see organizations really getting used to managing consumption and how much do we really want to allow, because oftentimes there are very compelling business reasons why they do need to consume these services as opposed to just looking at the amount of spend. So, it's manageable, but it's a new discipline and it's a new mindset that everybody needs to get their head around. And, we provide the infrastructure and governance capabilities to do that.
Great. Thanks very much.
Your next question comes from the line of Brent Bracelin with Piper Sandler. Your line is open.
Good afternoon, and thanks for taking the question. One quick one for you, Mike, and then a follow-up for Frank. The dollar value of new contract signings exceeded all of last year. And so my question is there some seasonality that drove that? Is this just improving sales productivity? Walk me through the drivers there of the RPO momentum you saw in Q4, and then one quick follow-up.
So, number of things. Obviously, you're always going to get seasonality because that's a bookings number, and obviously salespeople in Q4 are going to try to maximize their acceleration they're into. But it's also a function of the number of reps that we have now ramped up, and it's also a function of the fact that we're getting into larger customers as well too, and it's not just the larger new customers, it's existing large customers with big renewals because we're growing within those customers and the multi-year component of those customers. As I mentioned earlier, most initial what we call Cap 1 customers tend to be one-year contracts, and it's the renewal and the follow-on that tends to be the multi-year once they've proven the use cases. That's not always the case, that's just what we've been seeing historically. I do expect as we become a larger company, we'll see more and more of those Capacity 1 customers sign up for multi-year deals day one as well.
Got it. Helpful color there. And then, Frank, we've heard internal use case for data sharing inside of a corporation has the potential to become, I believe, the killer app here. You have some great stats on Data Marketplace, which, is really around sharing data externally. But Do you have any color for us around internal use cases for data sharing? Are you seeing any sort of material changes in customer interest for internal data sharing use cases?
The interesting thing is, most of the data sharing is actually externally, not internally. And, one of the reasons is, if I look at some of our larger customers, they maintain a single copy of all their data, and they allow all their operating functions and departments and business units to execute clusters against that single copy of the data. So they're sharing data effectively because they're having a single copy of the data, right? So they don't have to take advantage, of our data exchanges and data sharing because they're literally, sitting on the same copy of the data. And that's probably the reason why we sort of have two modes of sharing. One is really tightly coupled where everybody sits on the same data. And the other one is the more loosely coupled one, which is through our data sharing architecture, and customers can actually mix and match. It depends on their culture and how much they want to have custody of their own data, and things of that sort. That sort of drives, where they land on that. But the architecturally, the tightest model that we have is where there's one copy of the data for the entire enterprise. And anybody that wants to process against that data, they fire up their own warehouses and their own clusters, and they run their own workloads. And that's an extremely successful model for Snowflake and our customers.
Great, thank you.
Your next question comes from the line of David Hines with Canaccord Genuity. Your line is open.
Hey, thanks, guys. And I'll echo everyone else's congrats. Really impressive numbers. Just one from me. Frank, is there any way to think about, a dollar spent with Teradata or one of the legacy CDW vendors turns into, X amount of spend with Snowflake? And I don't know if you can think about it that way, but I sometimes get investors saying, hey, Teradata peaked at a little less than $3 billion in revenue. And look, I realize they're not the only share donator, and I realize this is not only replacement, but it gets at the question of how big can Snowflake really get? So any thoughts to help us kind of frame that question?
Yeah, interesting thing is that, a lot of the Teradata migrations we have done, customers are telling us, we're spending half the money and we're doing 10 times the amount of work. And that may not be what you want to hear, but obviously that's a hell of a deal for them. What's really expanding the marketplace is that, historically there have been fixed capacity limits on how much work you could do, and those are gone, on the Snowflake platform. You can run as many workloads concurrently, and you can provision those individual workloads, as much as you need to. So all of a sudden it's like, hey, I don't have to wait in line, for a 2 a.m. slot to run my little job. It's like everything runs concurrently as much as you can possibly imagine that you want to do. Obviously, there is a financial consequence to running a ton of workloads, but there's no operational limit on that. What that does is it really starts to inspire people, to do things they never entertained because there was not a possibility, for them to ever do that. So we're sort of in this period where we're unleashing all this imagination, as well as all the backlog that has already existed that people are just rushing towards now. And because data is a driver of digital transformation, it is really the signals that fuel digital processes. It's just a very, very core component to how enterprises are evolving. So I think this market can get, we've been told by a number of our customers that, we're the second largest line item in their budget behind the public cloud, and that may come as a shock to some. But I'm telling you that that's not going to be out of the ordinary going forward based on what we're seeing.
Perfect. Thank you, guys.
Your next question comes from the line of Mark Murphy with J.P. Morgan. Your line is open.
Thank you, Frank. At the Data Cloud Summit, Benoit had mentioned a goal to try to reduce end-to-end data latency by 10 times from where it is today. Pretty amazing goal. I was wondering if you could walk us through how long you think that might take and what types of new opportunities it could open up, maybe for more complex analysis or larger AI models and so forth inside of Snowflake.
Yeah, I probably should bring Benoit into the meeting. Let him answer that question. One of the areas that we are investing in where, we have extraordinary talent that we have attracted to the company is where our event-driven architectures, today, our event latency is sort of, seconds and minutes, right? But you want to drive that down to sub-seconds and dramatically sub-seconds. You start to open up use cases that are just very different, that are really not approachable by a platform approach today. They really require, very single purpose optimizations, right? You even think about, electronic trading and all these things. The latency has to be, approaching zero. That obviously that requires tremendous optimization, on our part, and we are working on that because we see that as a very, very critical part, of the ongoing evolution of digital transformations. We're doing a lot of stuff that is, where what our capabilities are today are totally adequate, but we're foreseeing a world where, and just as Benoit said, where we have to become much, much faster than what we've done so far. And certainly we have that room up. We know how to do it. So again, this is going to expand the marketplace in places where, these technologies historically have not been.
Thank you. And as a quick follow-up, Mike, it sounds like you're moving up market, engaging with more large enterprises pretty rapidly. Are you seeing a higher mix of Snowflake usage on Microsoft Azure, or should we pencil in AWS sticking around? Say I think it's been 80 to 85% of the usage. Do you think it would hang in there for this fiscal year?
I think AWS will continue to be our largest cloud for quite some time, but we are definitely seeing a lot of large enterprise customers choosing to go with Microsoft. But as I mentioned, the revenue is lagging when we book a deal, so it's going to be the second half of the year, and even in 2020, our fiscal 2023, I think you're going to see Azure kick up as a percentage, but we still think AWS will remain our number one cloud partner.
Thank you, and congrats.
Your next question comes from the line of Tyler Radke with Citi. Your line is open.
Hey, thanks very much for taking my questions, and appreciate the stats on data sharing. I wanted to ask you about that, the strength there. I wanted to see if that's helping you accelerate the win of new logos, if you're able to land with that use case and maybe a customer where you hadn't been successful before. And then as I think about that going forward, do you think data sharing could get to a point where you start breaking out that revenue over time? Thank you.
Well, I'm certainly hoping that we will break out that revenue over time, but obviously that's we're not there, and we don't know when that will be, but you'll be the first to know. What I will tell you, the data cloud conversation is so highly differentiated that even in accounts that are completely dominated by incumbents, that it reopens the conversation, and we've seen that over and over and over, and so it's. We love it because it's just the conversation goes from just modernizing existing workloads, bringing them to the cloud, doing POCs, benchmarking, to all of a sudden we're talking about complete innovation transformation, and that's inspiring for the customer, and obviously it's great for Snowflake. Yeah.
I will just add to that, Tyler, that I don't anticipate breaking out data sharing revenue anytime because it will be difficult, and the reason I say that is because the whole data sharing is going to drive people to use Snowflake because they're going to have to consume their data. But that's just a piece of their data. What they will then do is do everything on Snowflake where they're pulling their own data sources from other places. So it's all commingled together. At the end of the day, what data sharing does is it drives stickiness and it drives consumption.
Got it. I think Frank got my hopes up around the disclosure there.
He's not the accountant.
Just a follow-up, just as you're thinking about this year, curious how your assumptions are on close rates and, what you're putting into the forecast relative to last year as you think about the macro environment. Thank you.
I would just say we gave guidance for next year, and you're going to continue to see growth next year, and we feel very good about what we're seeing right now, and we're not really seeing any impact on the macro in our business at all.
Thank you.
Your next question comes from the line of Mark Rendy with Morgan Stanley. Your line is open.
Hi, Mark Rendy on for Keith Weiss. Thanks for taking my question. Congrats on the strong quarter. I guess just one for me. With the evolution of the go-to-market towards, vertical-specific solutions, as you look to better penetrate large customers, is there anything to call out in terms of potential impacts on the pace of large deals or execution more broadly? And then I guess generally, what verticals are next after kind of financial services? Thank you.
Well, in terms of verticals, media and tech are huge. Financial services, healthcare, life sciences, public sector, and then the whole re-platforming going on in software companies, data applications. So there's and then we have obviously retail, consumer packaged goods is a very important vertical for us also. So we have a lot of concurrent activity going on. Most of it is really related to our customers understanding who else is on Snowflake inside their vertical. How are they using it? What are the use cases? What are the outcomes? How are they doing it? And for us to be very, very proficient, and then also in terms of what is the data marketplace and data cloud context in that vertical. In other words, what data sources are they using on the outside? Are they providing data? Are they consuming data from the outside? So those are really the conversation that we're shifting towards. I mean, what are they getting out of it in terms of business benefit and outcomes? And it's very, very specific to their business. So this is a considerable shift because in the past there was always workload comparisons, POCs, benchmarks. How fast is this ingest job running versus this query? Now we're at a level where we're really fully engaged at the top of the house and the business itself. So it's very great for us because the IT selling motion, well, there's nothing wrong with that. This brings another level of strength to our outreach.
Great, thank you.
Your final question comes from the line of Andrew Nowinski with D.A. Davidson. Your line is open.
Great, thank you for squeezing me in. So I just want to start with a question on the $1 million or more customers. Really strong growth again this quarter, and I know it's a trailing 12-month calculation, so I'd assume some of that is coming from your existing customers versus new customers, but I'm just wondering if you could provide any more color or maybe around what's driving that.
Well, I would say 100% of that is coming from existing old customers because, as I said, any customer we signed up in the current last fiscal year, it takes them 6+ months to ramp those significant customers. So it's really coming from our existing customers, and we have a number of other customers that are on the cusp of that. So we think we'll continue to see that growth in $1 million+ trailing 12-month revenue customers going into next year.
That's great. Thanks, Mike. And then maybe just a quick follow-up on your guidance. Q1 certainly looks, coming off a great Q4, Q1 looked a little bit lower than expected, but then, the annual outlook was fantastic across the board, across all metrics. So it looks like you're expecting somewhat more of a stronger back half of the year. I'm just wondering if you could provide any more color on kind of assumptions for Q1 near term versus the back half of the year.
Yeah, I don't think that's correct, Andrew. Q1 is actually a very strong guide relative to where consensus is. We're seeing strength into Q1 in our business. And I think the guidance for the full year is prudent, given this is the start of the fiscal year.
Okay, very good. Thanks, Mike.
Ladies and gentlemen, this concludes today's